Hello guys, and welcome back to the channel. So in this video, we're going to take a look at the video of a brand new Palantir investor who just jumped on the bandwagon. And they're quite a big channel, so I'm very interested in their viewpoints and how they value Palantir. And this is ultra interesting because they have been Palantir bears and trashing on a lot of people who have been buying Palantir and have been believers in the story. So it's very interesting to see their viewpoint. And as always, if you're interested in this type of content, please make sure you hit the subscribe button. And if you want to get direct access to me, some future exclusive content, and you want to generally support the channel, check out the first link in the description box below where you can join our Patreon. So let's begin the video.
Guys, we're about to do a video on Palantir. In it, we get very technical with numbers on options and financials. It will sound overwhelming, but trust me, it just takes practice and repetition. Guys, Palantir, everyone loves their Palantir videos. Why do they love my Palantir videos? Well, first off, if you're new to this channel, we've done over 1,900 videos. Palantir has fallen significantly in the last year. Let's check it out right now. So what does Palantir do? In a very high level area, they help corporations and governments use data to make decisions that are really plaguing them, whatever they may be. I'm sure it's involved in counterterrorism, in terms of finding the best users for things, whatever it is. They're very big on customizing software to be able to analyze the data that a company has, okay?
It's so funny because when you track so many stocks, you start to get like this superficial understanding about them. I see this on a lot of their analysis that, you know, they do get a superficial understanding of the company, and then you miss a lot of things. And this is why I'm a lazy type of investor, and I like to do a crap ton of research on one company or a few companies. My portfolio is only on Palantir and Tesla, and that is not because I'm crazy. Maybe I'm a little bit crazy, but it's because I just haven't found, I want to have 10 companies, and I haven't found 8 other companies that I understand and trust the way that I trust these 2 companies. So Palantir is so much more than what they have described, but this is what they have time for.
Data is everything. As we get bigger and bigger in terms of our globalization, and as people get more and more connected, data will be all the more important. Palantir was founded by a guy I respect immensely, Peter Thiel. He's the guy who invested in Facebook to start. He's the guy who invested in eBay and PayPal. He is a brilliant, brilliant man. Now, he is a crypto lover, but because he's very big on decentralization of currency. I won't get into that right now, but Palantir has now had 8 quarters in a row of free cash flow. They're starting to turn the corner where they're no longer operating on this startup kind of mentality. They've been around since 2003, but look at the stock price, kids. Back in February of 2021, which was the peak of ARK, which is the peak of a lot of these big companies, it was at $39. But in January of 2021, it hit an all-time high of $45 intraday. The 50-week low was $6.44. It is currently at $8.14. All right, so let's look at the 8 pillars. Not enough data. So this is why this is very interesting to me. This is a very young company. We don't have 5 years of data. I usually avoid those. However, I will say that Palantir has become very interesting to me because of the income statement. Look at this revenue jump. 190, a billion, 1.4, 1.4.
It's so funny how all the Palantir bulls are becoming disheartened with the company because the growth is slowing, and you have this super conservative have been quite bearish on Palantir, I guess, because of the valuation, and somehow he's horny on the stock now because the income statement is going up so much. So funny with different viewpoints.
It is stabilized. However, their recent reports, Mo?
I was going to say, and because of the cash flow statement.
The cash flow statement has really helped out a lot. Yeah. They've gone cash flow positive, but they're growing their government and commercial, but most importantly, their commercial business increased by over 50% from the last year to this year.
Yeah, it was nearly 54%.
That is incredible. Yeah. Now, this is a company that's generating cash flow by the quarter. Let's look at their income statement by the quarter. So right here, revenue. This last quarter was 477. The same quarter was 392. Look at these jumps. Big, big jumps. Now, their net income hasn't translated yet. They're still losing money. But remember, guys, this is not exactly a company that I'd be interested in, usually. However, with the free cash flow coming in and then seeing that glimmer of hope at 8 quarters in a row of free cash flow.
I will say this, outside of last quarter, this loss of about 180 million, it's pretty consistent losses. It's not getting worse and worse and worse, which is something to be happy about. We see a lot of these companies that are these newer companies, and they lose more and more money as
TTCF
time goes on.
Yes, and that is a positive.
Yeah, it's not the best thing in the world, but it's a positive.
No, it's not. And they're expected. So here are analyst expectations expected to make $1.63 in the next 4 or 5 years. So let's say that happens. And remember, analysts tend to be a little aggressive.
Analysts tend to be a little aggressive. I think that when you have multi-bagger companies like I think Palantir is going to be, I don't like to look at analysts because they even have less time than you and me or these guys to analyze Palantir, and they have been dead wrong on, for example, Tesla, and I'm sure that they're dead wrong on this company too.
You sign just a 15 times multiple. What does that make this? This makes this about a $25 stock. It's currently at $8. It could triple. Now, again,
and a $15 multiple on Palantir is ridiculously low. I mean, if you just compare it to what the industry, the multiples that, SaaS companies trade at, it's ridiculously, unbelievably conservative. And he comes up with a $25 share price. So that's something that is
that going to happen? I don't know. But look at the revenue growth numbers. I do believe that Palantir is in an industry run by a great person, a visionary that has a lot of potential. This could be a multi-bagger. However, just like every investment, every great company isn't necessarily a great investment. It all depends on what you pay. So with Palantir, even with Palantir, I had to be very cautious to say, listen, they're still showing net income losses. We're still entering a world of potential global recession. They are expanding very quickly abroad, including the US. So they're still expanding
very quickly abroad. I don't know where he gets this data. Everybody's upset that their abroad growth has basically stalled and they're only growing in the US. But this is when you analyze too much companies, and then you start to get superficial about the ones that you're looking at.
A lot, and there's still a lot of potential in the company.
I hear they're moving a lot into the UK right now.
Are they?
Yep.
Great. So let's look at the one metric that I really like a lot to look at when it comes to software businesses: price to sales. Now it's 9.2, which is a little on the high side, but
by the way, I don't know where he got that number from. It's not 9.2, and I mean the stock price is way lower than it is now. So it's much less, but I think even at the time when they were shooting the video, I don't know if they had like an old page open or I don't know, but that number is definitely lower today.
They have a lot of growth potential. Analysts expect, according to analysts again, revenue growth numbers of over 20% a year for the next 5 years. Look at a company like Microsoft. Microsoft's price to sales ratio is about 9, but I do think Microsoft's overpriced. So let's say it should be about 6. Well, Palantir has a lot more growth potential than Microsoft. So maybe they can justify 8 or 9, which takes them to where they're at today. Again, this is all part of the art of investing. We don't know what Palantir is really worth. The one thing I do like about them also, this is the big thing I love about Palantir. So you look at Palantir, it's a $16.87 billion company, but look at their enterprise value, 15.4. This means taking out their debt versus their cash, they actually would give you extra money back upon buying the company because there's more cash than debt. They had $2.4 billion more in cash than debt. That's a huge, actually they had zero debt. Did they have zero debt? I think they said.
Especially for a new company like this, a growing company like this.
Absolutely.
You don't see that a lot.
Practically zero debt. Not zero exactly.
It is zero. Let me just help you out. Zero. Just take it from
$243 million in long-term liabilities. That's what I like to see. Software businesses that keep debt low because they're spitting off so much cash. Look at this gross margin, by the way.
It's almost 80%.
Their gross margin is 78.6%.
Oh my God, a software company that has 80% gross margin is so rare.
It's like 68%. This is crazy. They do big contracts. When they contract with a company, they're charging 5, 10, 20, 30, 40, 50 million dollars to contract with these companies and countries. This is an incredible number. So what can this company grow to? I don't know. But if I can get a better understanding of their net income, which I think I can, everything else screams overpriced. But the stock has fallen to the point where it's starting to make a little bit of sense. So let's look at the stock analyzer tool for Palantir. All right. So Mo, we're going to do a 10-year analysis. And the reason I do 10 years is it's enough to get through a full cycle usually. And I do believe Palantir will be around in 10 years. I do believe they'll generate more revenue and more profit. And I'm hoping to be able to buy it at a reasonable price today. So
if Palantir is going to be around in 10 years, is that even a question? Are they going to grow revenues? Is that even a question? So this is the very interesting part that we have been waiting for. Let us see their superficial assumptions.
First line, revenue growth over the next 10 years. Give me low, middle, and high.
How about 12, 16, and 20?
I actually think you're being too conservative.
I think so too.
On the high side, but it's okay.
On the high side?
Yeah.
Well, analysts had about mid 20%.
Oh, did they?
Yeah.
I mean, it's so funny. Palantir has a goal of 30%. We're upset that they're not making the 30%. We are in a bad economic environment. I believe that they will land somewhere on 23% this year. And we are hoping, obviously we don't know because we haven't got a new guidance on management, that they're going to re-accelerate the growth. And it wouldn't be very surprising because they're adding a lot of customers. You know, they're making a lot of progress on a lot of fronts. So them on the low estimate to think with that Palantir is going to grow an average of 12% per year, that's just complete wacko. If I were to do this, I would go like 15 on low, 20 mild, and 25 high. And I think that there is a chance that Palantir will go back to the 30% average.
Sorry, I apologize. I think you're fine. All right, profit margin, because they're currently not generating any profit.
Yeah, it's a hard one.
It's a hard one.
I don't know. 15, 20, 25.
Okay, actually, that's exactly what I was thinking.
Okay.
But keep in mind, guys, their gross margin is very, very high. So if they can get to the point where they get over that certain hump where they're generating good profit, I think it'll be higher than 15, 20, and 25. But I think over a 10-year period, it should average about 15 on the low side, 25 on the high side, if they hit the goals that they're putting out there.
I kind of actually agree with this. I have read some reports that Palantir is very heavy in the beginning when they start with customers, and then once they have scaled with customers, they are insanely profitable. So this is maybe also part of the reason why we see a margin grow down, because have seen the margin go down, because they have been acquiring a lot of customers, and this will scale into a lot of profitability. But we don't fully know what that profitability will be. My guess is that it will be around 20-25%. So here I would agree with them.
Same thing for
Free cash flow?
free cash flow, yeah.
Now, I could make the argument of higher because their free cash flow number
Oh, it is higher.
Exactly.
way
That's a good
higher.
point.
They're positive free cash flow.
That's a good point. But over a decade, will it balance out?
Maybe. But remember, the beginning parts, the free cash flow will be there.
would be there.
So
Okay.
I'm actually thinking 20, 25, and 30.
Fair.
Okay, now PE and price of free cash flow. Now in 10 years, Mo, I do believe Palantir will still have a lot of potential for growth.
I almost want to go 16, 18, and 20.
16, 18, and 20. Now guys, if you're new to the channel, we rarely go this high. The reason we are is in 10 years, Palantir will still be a young company that still has a lot of growth potential.
I mean, they're putting it at a PEG ratio of 1. Like they're saying that they will be growing 20% and the PE will be 20%. That's a PEG ratio of 1, and it will be a freaking bargain at that point. So if the market is in any way, shape, or form bullish at that time, I think Palantir easily will have a 40 PE. That is also because the industry is just valued so much more than what they're thinking. So they're ultra conservative on the growth, and they're ultra conservative on the future P that the stock will have. So just keep that in mind.
With the world getting bigger and bigger and bigger, and their ability to provide services for that world getting larger, and the pie will get larger, I'm okay giving them a premium on their PE and price of free cash flow. And that's what we're going to do. The same thing for PE and price of free cash flow. Now, desired annual return. Guys, this is about margin of safety. The more unknowns we have and the more aggressive we are with our assumptions, the higher desired annual return. Mo,
Totally
do you think this company is out of the clear in terms of worrying about?
No.
No.
I almost want to go 17 and a half, 20, 22 and a half.
Wow. So guys, we usually do like 12, 14, 16, 12, 13, 15. I don't disagree with Mo. I would have probably done 15, 20, and 25.
I was thinking about going 15, and I was like, man, maybe 15 is a little bit too low. Go through your question marks. Would you be surprised if this company was not here in 10 years?
I wouldn't be.
I'm hesitant.
I think if they're not here, it's because they've been acquired by somebody.
Okay.
Because I look at it going, they have the cash.
Yeah.
They don't have debt where they're going to be able.
Founder shares, baby. They Karp and Peter Thiel would never let it happen. And they actually, I heard that they got a buyout offer from Oracle for $30 billion years ago, and they just walked away.
To
It's not going to bury them.
They're not going to get buried.
It's not a slam dunk for me.
I think you're right.
Therefore, I gave it a higher margin of safety.
Okay, but I think the low side. Okay, you know what? I'm going to do that. I'm going to do 17.5. What'd you say? 20 and 22.5?
Yeah.
Okay, guys, let's hit the analyze button. Now, the company is currently at $8. I want you to remember that if it's all green, it doesn't mean you go out and buy. It means go verify this. And stay with me after you see the numbers here. The reason being is I'm going to show you the income I can make selling puts at the prices I want to sell it for. So scroll down. All right. A low price of about 3, high price of between 550 and 7.
I mean, when you do idiotic numbers on Palantir, you get idiotic prices. So obviously the 12% growth with the 10 PE is going to give you the $2 share price on the low assumption. But keep in mind that even they are getting, with this insanely low calculation, they are getting prices that were very near. So that's a very positive sign. Look, they have 558 and 668. And 668, I believe we hit that not so long ago, and we're very close to that today. So that's very interesting.
Middle price of 375 to 467. All right. Now, in full disclosure, I have puts at $6 and $5 on this company. All right. Now, even though $6 on the high side, I have a lot of margin of safety here. So I do believe I can justify that as starting a position. So let's go see. Let's go to January of 2020.
Okay, I'm not going to bore you with the option details. You can watch the video if you are interested in that. It's definitely an intriguing topic, but I don't know anything about it. Very interesting analysis and very, very, very conservative numbers. And they still come up to where the stock is today. So that to me is just showing that the stock is really starting to be a bargain. And I hope to add more stocks. Let me know what you guys think. Make sure you're subscribed. And I will see you in the next video. Ciao, ciao.